Yo, what's going on, everybody? It is Tuesday, April 25th. Tomorrow's my birthday, so don't forget about it. I haven't been making a lot of videos because I've been kind of like uninspired. I told you guys what was going to happen in April with the tax drain, and that's what's going on. I mean, there's not a lot I can add to it, but I will give you some outlook today. We have had so far in the month of April about a 256 billion tax drain. That's normal. That's not enormous. Last year between April and I guess it was like June, it was maybe like a 450 billion or something, but we still have that June 15th quarterly corporate tax payment, but let's leave that aside for now. The current April drain, okay? And all this stuff by now, I mean, if you've been following me, it's very, very arithmetic. I mean, you don't need to be some kind of freaking, economic or market wizard to understand that, when you're draining out the financial balances of the economy, I mean, it's just not going to be good for the stock market. And I tell you when there's drains and I tell you when there's additions. And overall, in the big picture, there's just like a perpetual net addition because the government is a deficit spending entity, so it is always on balance adding to the financial balances of the non-government, which means that it's a positive thing. That's why it's ridiculous to say like a perma bull or something. Yeah, when there's net spending going on and it is something that is dependable, like we just know that's the way the U.S. government operates, that net spending is going to continue to add to the financial balances of the non-government. And you're going to have these periods a couple of times a year where you're going to get tax drains and you're going to get pullbacks. But I mean, this is just arithmetic. I don't see what it's a different discussion if we're going to talk about like what stocks or what sectors. That's a valid discussion, okay? And I'm into that too, and I give you from time to time where I think the sectors are going to benefit. But I mean, a rising tide floats all boats, and we know, like, for example, I'll just give you an obvious example, like defense. Like that's always going to go up because they just keep adding to the defense, to the military budget, stuff like that. But anyway, so we had a 256 billion drain. Now look, tomorrow actually, my birthday, is a Social Security payment. Yesterday we had a pretty big drain of 26 billion, so that explains the weakness today. Tomorrow we should get our first positive fiscal flow, maybe not for the month, but the biggest one so far for the month, okay? Because most of the tax drain is over. So tomorrow, I'm saying today was a great opportunity to buy because you bought the bottom, okay? And we'll stabilize. And then as we move into next week, and May is a month where we are going to see a quarterly interest payment, May 15th, the last one in February, that was like 50 something billion. It's huge because of the Fed rate increases. So we're going to get that. But don't forget on May 3rd, we get a Fed meeting, I think. Yeah, May 3rd. So that'll be a 25 basis point rate hike, and maybe they'll say something to excite the monetarists, something like they're going to pause or see what's going to happen or something like that. So we could get an additional bonus from that. But now, tomorrow we get a Social Security payment. And then basically for the month of May, we get net positive fiscal flows, which will peak on May 15th with the quarterly interest payment. Now remember, if you guys are paying attention, I said the peak was going to come in February 15th with that quarterly interest payment. And if you go back and if you look at where the market peaked out, that was pretty much exactly within a day or two of where the market peaked out. So like if you listen to me, you probably should have made a lot of money. And like if you're listening to me now, you probably should make a lot of money, and you should subscribe for my report. I don't know why you don't, because you guys all want freebies. So we're good. We're going to be good going into the June 15th quarterly corporate tax payment. And then, June is when the whole debt ceiling situation really comes to some kind of a conclusion. Either they're going to raise it. Right now, Biden is saying that he will veto the House bill which calls for spending. So, he's showing a pair of cojones there. We'll see what happens. But that's the big thing. That's the key thing, and that's the thing I've been saying. If we go into a hard debt ceiling, where the government is then, really kind of not shut down, but reliant on only the tax revenues coming in, then, that's bad. We go into a downward spiral, and it's the opposite of what I was talking about with positive net flows into the swimming pool. This is just a steady drain. And it's going to be bad news, like really bad news. Like, I don't even think that the automatic stabilizers would be able to kick in full force. I'm talking about things like unemployment benefits and disability and all that kind of stuff, because they're just going to be locked in by that, the reality of the debt ceiling, that the government can only spend what it brings in taxes. And as the economy slows down and people lose their jobs and get laid off, there's going to be less taxes and less spending and less taxes and less spending. And it's a freaking disaster. It's self-imposed. It's something we do to ourselves because of ignorance and because of ideology, bad ideology, I might say. Now, I still don't think that's going to happen. I'm keeping a positive frame of mind. So I'm telling you, if you want to trade over the next, 6 weeks or so, today was the bottom. We're going to go up. We're going to start to stabilize and go up as the flows go positive once again. And we'll go up until May 15th. And that's going to be the quarterly interest payment of 50-something billion. And then we'll start to kind of waver. We'll start to kind of flutter. And then June is looking bad with the corporate tax payment and the ultimate resolution of the debt ceiling. And I'll say this, if the debt ceiling is resolved, then you buy that dip in June. It's not a problem. It'll just be an opportunity for you. But that's it. It's not hard, folks. It's not hard. And if you concentrate, I always say to people, like, if you concentrate on an index that follows the S&P 500, that makes your life very easy. And you understand these ebbs and flows. This is what it is. It's like the tide's coming in, the tide's going out. Is the swimming pool filling up? Is it draining down? Or you could focus on big name stocks that are always going to be around. I mean, these big companies like, Apple and Google and Microsoft and Walmart and, these big companies, if that's your portfolio, you're going to be fine if you understand, these periods during the year when we get these ebbs and flows in the market. I mean, it's not a lot. I'm trying to keep this as simple as possible for you. This is not a hard thing. It's really not a hard thing. I mean, they make it hard with all this just like micro focus on monetary policy. I mean, if you look at the interest income transfers going on right now, I mean, it's crazy. I mean, we're like 230 billion addition to the economy over where we were last year. I mean, everyone who's been like so freaked out over the interest rate, it's because they totally don't understand, a balance sheet. It's got two sides. You got assets and liabilities. I mean, so like it's an asset. There's a liability side, I get it. You got to pay more on your credit cards and stuff like that. It raises prices. But somebody's gaining those prices and somebody's gaining that interest. So it's kind of like a net wash. That's why I've been telling you guys for so long, like, I don't pay attention to monetary policy because it's really, in the end, it's kind of like a neutral thing. But in this particular case, with rates increasing, it's not even neutral. It's a positive. It's a net addition to the fiscal flows to the economy. Let everybody else freak out. I don't. I just sit here, I just watch, and these are very, very high level people. I've been on Wall Street for over 40 years. I know a lot of these people. Very high level people talking like this. They don't understand. It's kind of like a mythology in their head. It's kind of like I call it an orthodoxy. It's just like it's a belief system that they're married to this belief system, and it's the only way that they could see things. It's the only way that they could see things. So it's your choice. I mean, you can go with that and be scared all the time and listen to what they say, or you could educate yourself and have an advantage. And I just happen to think, I don't know, maybe I'm crazy, but I think educating myself and having an advantage, I don't know, I think that's a good thing. What do you think? Anyway, that's it for today, folks. Tomorrow's my birthday. I'll see you tomorrow. Bye.